Let's bring in UBS Art Cashin, who's calling this Reddit trade an old game with a different name. Art, what do you mean by that?
Well, it's, we've seen both short squeezes before in 1902, not that I'm quite that old, but in 1902, there was a massive short squeeze in Northern Pacific Railroad. And that stock went from $45 to $1,000 as people tried to scramble to cover. And that forced the market into a very heavy sell-off in general. The new U.S. Steel Company went from 60 down to 20. And the other thing that people keep forgetting, I mean, this is not the discovery of fire, all right? This has happened so many times before. You get hedge funds that are overextended. I'm sure some of the viewers remember something called long-term capital markets, and they traded mainly in bonds, foreign bonds, and treasuries. And they got overextended, not unlike some of the people in GameStop. And when it blew up, it created a massive sell-off in the market in general, even though they were in bonds, but they lost so much money, and the leverage and liquidity was such that the Fed and Wall Street had to call people together to bail the market out. And we've seen that time and time again, going all the way back to 5,000 years ago when the ancient Sumerians were trying to short the grain markets, and the weather turned good, and they got caught off base. So it's not tremendously new. Now, the Reddit format is a very sophisticated chat room, and I believe one of your earlier guests, have some suspicions that it's not a democratization. I'm not sure that everything you're reading is coming from the little guy, the public. I think there may be some big professionals in there that want to turn the crowd into a mob and get them to attack the hedge funds by buying this. That lends you great support and puts buying power under a stock you want to see higher. So I think we've seen some of this before, Morgan.
Shepard Smith here. Thanks for watching CNBC on YouTube.